Forget the economic cycles your boring high school textbook fed you. October 24, 1929, wasn't a financial crisis on Wall Street. It was the public execution of a collective hallucination. It was the Roaring Twenties. The air smelled like illegal bootleg gin and the unearned arrogance of everyone thinking they were the next Rockefeller. Money wasn't just growing, it was exploding like a supernova. It felt like the party would never end. Until that Thursday. Suddenly the gold turned to lead. The banks started screaming. The tickers couldn't keep up with the carnage, and the backbone of the American dream didn't just bend, it snapped. The official story? They called it a technical adjustment following excessive speculation. The Federal Reserve told the public, "Relax, our vaults are locked with the bedrock of civilization." The masses believed it was just a bad seasonal flu, a temporary dip before the invisible hand of the free market tucked them back into bed with a fresh stack of bills. They told you the system was built for stability. They lied. But if you believe God lives on Wall Street, you clearly haven't seen how the devil splits the check. The truth is, the 1929 crash was the most successful Ponzi scheme team-building event in human history. The game was called margin trading. In plain English, it means buying companies you don't understand with money you don't actually have. Bankers were handing out leverage like flyers at a strip club. They knew the house was made of cardboard, but as long as the fire hadn't reached their office, they kept pouring the gasoline. Collusion, please. At that level, the politicians and the bankers were the same people. Your congressman's campaign fund was hidden inside those inflated stock prices. This wasn't just greed, it was a legal nationwide suicide pact. You think the margin calls were the end? No. The real horror is that while the building was collapsing, the architects had already packed their parachutes. The domino effect was a plague. One day you're buying pearl necklaces at Tiffany's. The next you're fighting your neighbor for a sack of rotting potatoes. Anger? No, the primary emotion was absurdity. People watched their life savings, decades of sweat and blood, evaporate into thin air because a few numbers on a ticker tape changed. Banks didn't close because they ran out of money. They closed because they gambled your money on a bet they couldn't afford to lose. And the house. The house had already skipped town. October 29, 1929, Black Tuesday. The day the bill for a decade of arrogance finally came due. Legend says hotel clerks in Lower Manhattan started asking guests, "Are you checking in to sleep or to jump?" History tells us the suicide wave was partly exaggerated by the press, but the myth tells a deeper truth. When money becomes your only god, its disappearance is a literal death sentence. Don't look at these photos like they're ancient artifacts. The ghosts of 1929 aren't in the past. They're sitting in your banking app right now. 1929 taught the elites a terrifying lesson. You can't stop a collapse, but you can delay it by turning everyone into collateral. Today, we aren't living in a recovery. We are living in a chronic, slow-motion version of the Great Depression. The soaring cost of living, the unreachable housing market, the infinite printing of currency, it's the same script, just with better graphics. In 1929, the bubble popped in a day. Today, they're trying to keep the balloon inflated until it's the size of the entire planet. Wall Street doesn't have kings, it only has temporary winners and permanent debt. 1929 proved that when a society starts rewarding the hustle over the harvest, speculation over labor, the fall isn't a possibility, it's a mathematical certainty. The first step off that ledge isn't taken at the height of the crash. It's taken the moment you believe the party will never end. History doesn't repeat, but it rhymes with a vengeance.